Okay, traders. All right, we're gearing up towards the US CPI numbers right now. I'm not surprised. I haven't actually updated my charts for a couple of days, primarily because I've just been finishing off a lot of the back end components of the training program. So, just having a look, right? If I just give you a look at the charts, and I'll come back to the data in a sec. The currencies in particular haven't really gone anywhere. Now, I've just adjusted a bunch of trend lines, but this last week of action, we've seen some new highs, touch on some new lows here and there, but we're back to exactly where we were at the start, right? And this is not uncommon. It's like a flush out of both sides of the market pre these big announcements, right? So it's, to me, the market is gearing up. Obviously, this is the big event. It's the main show, and the currencies, etc., are performing like that. And you can see just here, just looking at the dollar index, right? So it's been drifting, but every one of these trend lines has been giving it some level of support. And right, and that's what you get in an uptrend, right? When an instrument is trending up, you'll find you'll have a bunch of support trend lines when it starts to track lower. And you know what? If anything, it's just cleaned out a bit of the dead wood. So to me, it's a good chance to this week, or this last week since the non-farms, is just to flush out some of this stuff. I'm just going to get rid of some of these trend lines. And really just tune it up, because I think Joshua mentioned it there. There's so many instruments that are going to be active, right? So it's very important. You obviously on the right one, don't overextend yourself, right? Going with pending orders is problematic. Obviously, the only thing with going with pending orders, right, you lose control of the position at the time of entry, and it's very unnerving. But I tell you what, if there's big variance in the numbers, you're going to miss it otherwise. So maybe something small to go in. So just having a look here across the board and just really focusing in on the currencies just at the moment. Dollar index, you've got action both sides. Dollar Swiss, dollar yen. Actually, you've got a bit almost an Ichimoku set up here. Dollar CAD's a bit of a loose as a goose. Euro is really coming to a fine point. It's ready to go anywhere, as is sterling, Aussie, and Kiwi for that matter as well. So basically everything's up for grabs. It really comes down, because most of them have got good technical setups, it really comes down to your personal preference, right? So that's where I would be gearing it up. Now, just coming back to the actual numbers, right? Well, leave my pen out. Okay, so really the year on year is what the Fed's been looking at, right? 9.1, previous number, 8.7 forecast. Now, that's still a high print, right? They're still going to have to raise rates aggressively. But a weaker number should be the first time we've had a number that is weaker than the previous month for some time, right? And that could give the market some little bit of a breather. So make sure you check that out. Now, it's one of the problems with some of these numbers is there's so many of them, right? And they've got two types, the core inflation numbers, and then they're just the inflation numbers. So you want to make sure they're all the same, but the market will react specifically to this number here, the 8.7. So that's what's factored in, right? So when you think of that, okay, 8.7 factored in. Stronger number, dollar rallies. Weaker number, it falls. But if it comes out at 8.7, don't expect any massive sell-off, because that's already been sort of happening, right? So that's what you've got to sort of look for. So 8.7 is got to be your focus. Now, when you come to different instruments, right, this is obviously a big number for equity markets. Now, you know that the equity markets open up an hour later after the numbers come out. So you're going to see some gapping in the equities. Can you wait for that or not? Maybe you can get into some of the US equity futures, right? If you've got access to CFDs, etc. The currencies will move immediately, right? The dollar, this is where and with the clean out, I was just showing you on the charts where the currencies have spiked up, it's gone down. They've flushed out a lot of positions. It's a chance to put new positions on, right? If we get another print above 9%, everyone who's sort of factored in an 8.7 is going to buy, and then there'll be other people buying. So another print above 9%, and definitely above 9.1, the dollar's got to have a real big run. But just be aware of the initial reaction, right? So you're going to see a massive push one way. Liquidity will disappear. It'll come back in the market. You'll probably see a 20 point retracement after the first 50-point spike. That's where you got to get in. So trading these big numbers, right? If we've got technical levels, then it's a treat, because you've got levels of liquidity to deal with. That's what these lines are. They're not only entry and entry levels. That's where the liquidity is. So you can actually be confident you're going to get set there if you were trading. If there's no levels around, well, then that's when it skips a beat and just takes off. So you've got to be sort of a little bit wary here of the strategy to get in. With a big number, I would say trim your position size and maybe just hit the market. I'll probably be looking to hit it live. Hit it once, hit it twice if the numbers run. Because if you put all your eggs in the one basket, you see it take off, whether it's strong or weak, you jump in, and then you see that 20-point retracement immediately, you sort of could be almost out of the game. But then you got to give it time to get going, let the market see the numbers, and then move with it. Okay, so it's pretty huge. And when you come back and you're thinking of the number, right, there's something mentally you've got to think of. This release is the next interest rate announcement, right? So when you're looking at these numbers here, you got to think, okay, so if it's above 9.1, they're going to go aggressive again. If it's 8.7 a little bit, they might buy them a little bit of time. They're still raising rates, but above 9%, they've got to go by 0.75 again, I would think, right? So that's where we've got to do it. And leading up to this, the markets will just wait, right? So think of the markets that interest rates hit directly: equity markets, currencies, right? I know the commodities have got a sea of red here at the moment, and that's by the by. Really focus on the equity markets and the dollar. I think for this opportunity, there's so much opportunity across the currencies. You shouldn't have any trouble finding an instrument that you like, that's in your time zone, that you can hit. Euro will be the main one. That's where the most liquidity is. And it's probably got the best setup because it's nice and tight. So when you are looking for your instruments, to me, I'm looking for a real peach. And what I mean by that is something that just is really waiting for this number. And you can see, even if I just move this across this trend line, like this is, we've got clear levels here. Now, I would expect before the number, almost a break topside, break downside, and back to here, right? That's what you usually get. Now, now just prepare for this. If it comes out as expected, right, that's the only one thing that will shock the market, right? If it comes out at 8.7%, it's already factored in. There'll be a bit of discombobulation, and the market will sit there. And then I think the dollar will slowly drift lower, because what the narration will be is, US inflation's peaked. Maybe this is the top. But really, we have to wait for the next number. If that's weaker again, well, then the interest rate hikes previously are impacting. I still think it's too early for those earlier interest rate hikes to be impacting. It won't be far away, but I still think we're due one more big print. And that's where we get a chance here to see the US dollar charge again. I know some of these other central banks are starting to raise interest rates. Don't worry about that for now. Over the next 24 hours, it'll be about the dollar. And that's what we need. But you ideally want a 9% print, right, to get the strong dollar. Under 8.5, I tell you what, there's going to be a big dollar sell-off. So the dollar rally, the top pairs up here all rally, the bottom pairs fall, and vice versa for weak numbers. But there's not much else to go through, guys. There's this is a vanilla number, and this is why it's so good. So much better than a central bank meeting. You've got one number here really to focus on. I know there's a couple of little components. 9.1, 8.7 is the release. So we're just looking at that. Is it stronger or weaker? Get involved. As I said, like 0.2% variance here on the number, on a CPI number, that's pretty decent, right? So 0.3%, like up towards 9%, that's going to be great. Down to say 8.4, that'd be pretty awesome for a dollar sell-off as well. All right, guys, all the best. Cheerio.